Tax deductions for truck drivers. How to lower your tax bill.
No matter how much experience you have driving a truck, if you feel the call to explore the endless highways, you will enjoy your time on the road. However, this feeling typically disappears without a trace whenever tax period approaches. Do you know how to not put yourself under emotional strain and fall out of love with your life's work? Well, just take it easy and don't waste the opportunity to save your money with tax deductions for truck drivers.
We have compiled some tips on how to manage various kinds of business expenses throughout the year to reduce annual taxes and reap eventual benefits.
Who qualifies as a truck driver for tax purposes?
Some years ago, it did not matter whether you were an owner-operator or a company driver. Everyone could claim tax deductions. Today, we do not talk about employees of trucking companies in terms of truck tax deduction any longer. They just submit a W-2 form at the end of the year.
Drivers' expenses are not tax deductible, even if they are related to the job. Self-employed drivers have reserved the right to deduct their business expenses from their taxable income. This applies to owner-operator and all types of independent contractors.
Requirements for claiming tax deductions as a truck driver.
The tax inspector determines whether you meet the requirements for claiming a tax deduction by checking tax documents you have.
Owner-operator tax write-offs are based on 1099 NECs, which they receive from their customers for transactions that exceed $600 at the end of the year.
They then fill in Schedule C for per diem expenses and Schedule SE for self-employment taxes. All these forms should be submitted along with Form 1040 to file an annual income tax return.
Common tax deductions for truck drivers.
Deductible expenses for truck drivers include a long list of running costs. And to claim them, you have to submit to the IRS a record of the expense, including receipts and other supporting documentation.
Tax breaks for truck drivers are mainly associated with fuel, maintenance, and equipment depreciation expenses. This is true only for vehicle used for trucking business.
Owner-operators in the U.S. submit quarterly IFTA reports, and when the time to pay taxes comes, drivers can also deduct fuel costs. However, the taxpayer should retain some documents as evidence in the form of a receipt or invoice.
If you need to buy tires or bungee cords, or if you need to wash your truck after a long haul, you can deduct 100% of the cost.
Depreciation expenses can be deducted in two ways.
Straight line depreciation is spread evenly over several tax years. Accelerated depreciation implies the gradual decrease of an equipment's value and an appropriate deduction rate.
Additional owner-operator tax write-offs include licenses and permits, rental expenses, and truck lease payments if you use truck leasing to expand your over-the-road fleet.
To apply for a mileage deduction, keep a mileage log. This includes the date, the purpose for the trip, and the total miles driven.
There's normally no need to submit the log to the IRS. They are only interested in the odometer readings at the start and the end of each year. Remember to submit the odometer readings if you recently bought a new truck. As for other travel expenses, the IRS requires claiming the actual costs of travel. Truck drivers have to keep all receipts for tolls, fees, accommodation, and parking expenses.
If you pay toll fees electronically, you should save a copy of the digital receipt.
You're allowed to deduct certain office expenses, including software, photocopying, stationery, such as pens, staplers, and paper clips, and postage.
Be ready to show that these are requisite business expenses and not personal expenses.
When determining the taxable amount, owner-operators can cut off the value of insurance premiums associated with business, such as liability insurance, property damage insurance, and loss of income insurance that covers cargo damage or loss. Self-employed drivers can also submit their personal health insurance receipts for tax deduction. As it is not a commercial expense, health insurance premiums are deductible as an above-the-line deduction on Form 1040.
All communication expenses such as desktops or portable computers for work or monthly ISP charges are deductible.
The costs of telephone service, communication equipment, mobile phones, and business calls while on a business trip, including sending faxes, are deductible as long as the taxpayer can justify them. Be ready to produce your contract with the mobile carrier or ISP if asked to.
Association fees and dues are deductible.
This kind of membership provides a lot of benefits for small business owners, such as access to exclusive products and valuable services that help their trucking business to grow.
Non-deductible expenses for truck drivers.
Self-employed drivers who receive $1,099 NECs can claim most expenses related to their business for tax deduction. However, some expenses are not deductible. To avoid future penalties, be sure to submit the correct data for a tax deduction, done on a fair and reasonable basis that reflects the purpose of the expense.
Drivers who spend most of their time away from home can claim a trucker meal deduction. Long-distance drivers who drive far from their home or office can deduct 80% of the cost of their meals.
You can submit all your food bills and claim your actual expenses. If you mostly drive locally, less than a night away from your tax home, meal expenses will not be deductible.
If your business partners reimburse your expenses, you are not allowed to include them in your tax deductions.
For example, you can deduct from the payable tax amount the legal fees you pay, including an objection or appeal to a business court. However, the full amount of these deductible fees must first be reduced by any other reimbursement of your expenses that you receive.
If you use the same device for your business and personal needs, you can only deduct the part that you use for your business. And you must prove that these expenses were used solely for work.
If your work clothes can be adapted for everyday use, even if you use them only when driving a truck, you cannot include their cost in a tax deduction for truck drivers. Only overalls or things required to make your work safe, such as goggles or gloves, can be included into tax-deductible accessory expenses, although work boots are not tax-deductible.
Mainly because it allows for you to save money on your taxes and still get the things that you need for your business.
Reduce your taxable income.
By deducting the bulk of your expenses from your taxable income, you pay less in taxes. How does this work?
So you take your gross income and then you calculate your adjustable gross income by reducing your deductible expenses. And as a result, you only have the adjustable gross income amount taxed.
You can cover the daily needs of your business without affecting your cash flow. You can even increase it by lowering your taxable income or getting tax refunds.
Sounds great, doesn't it?
Conclusion.
The list of tax deductions for owner-operators given in this video is not complete. Tax cutoffs may be different in each individual case, but a sensible approach to tax deductions can even see you derive profits from your business expenses.
It's important to keep a record of any costs you may have that are job-related throughout the tax period. Then the tax season may become your favorite time of the year. Being a part of a great team, such as HMD Trucking, one of the leading truck companies, you'll always be able to ask an expert for help if you have any doubt. Whether you want a position as a company driver or you're just starting out your career as an owner-operator, we welcome you to come and join the HMD team.